Realty Nation, it's Abhi. Welcome to the show. I have a really good guest for you today. We're talking about asset protection, and it's one of my favorite topics because there are a lot of things that people miss, investors miss, when looking at asset protection and doing things the right way. It's one thing to go on YouTube and apply everything that you learn on YouTube. It's another thing to actually talk to somebody that gets it. And so I went out and sought the expert on asset protection, and he'll be with us in just a second. I also have a little rant for you after my interview with Clint Coons. So we'll do that afterwards. It's going to be an awesome one for you today. Cannot miss any of it. So make sure that you stay totally tuned. This podcast today is brought to you by Nevada Real Estate Investments, your premier source for cash flow investment property. Check them out. Go to www.turnkeyrealestateinvestments.com. All right, let's get to it. Mr. Clint Coons from Anderson Business Advisors. Welcome to the show.
Hey, thanks for having me on.
You got it. Good to have you again. Good to see you. So give us a little rundown who you are and what you do.
Well, I'm the founding partner of Anderson Business Advisors, and I'm an active real estate investor, and I'm an attorney. So you put all that together, and what I do is I help real estate investors learn how, or teach them how to reduce taxes and also protect their investments at the same time. So our firm specializes in working with investors all over the country. I built up a portfolio of over 100 properties through investing. And so I've learned some techniques that we share with all of the people that we work with on as far as how to structure these assets the right way. Because there's so many professionals out there that, tell their clients, oh, you should do this, or their CPA tells them you should do that. And really they end up missing the larger picture when it comes to investing.
That's what's really kind of boggles my mind, right? It's like people will buy a buy and hold single family or a small multifamily, and they'll own it in their own name. Or they'll own it it's in an entity that's not the right entity for that specific deal. Or they'll throw 35 properties into one LLC and they don't really know what they're doing. Or they have an LLC and no operating agreement, right? So there are certain things that are just blatant misses that drive me absolutely crazy. And I'm sure you see this on a daily basis. What are some of the top things that you see, that you find that investors are making mistakes on?
Well, it's that, so investors fail at this aspect of it. They set up an entity and they think that it's a one-size-fits-all approach to investing. And the way we approach real estate investing, and as far as protection, is that we look at it from an asset protection point of view, a tax planning point of view, and a business planning point of view. You see, when I got started in this 20 years ago, I was just focused on asset protection. And then I got into tax as well. And so I would make moves that would reduce my taxes to the greatest extent as possible. And I thought this was great. I'd pay zero in tax for a few years, and I thought I was the smartest guy out there. But then I realized that at the end of the day, I was missing out on what my true motivations and goals were for building my business. And that was to go out and buy real estate. And so what occurred is that I couldn't actually qualify for loans because my tax returns were working against me. That, reducing taxes down to nothing, that may sound great. And yeah, it is nice not to have to pay taxes, but you can't qualify when it comes to purchasing real estate. And so the mistakes that I see people make time and time again is that they create these structures and they don't realize the impact that the structure they're creating is going to have on their business. You see, entities can help you or they can hurt you. And most people that advise individuals on how to protect themselves, they don't understand how these entities can help or hurt the real estate investor because they're not real estate investors themselves. I mean, as I say, I have over 100 properties and I'm an active real estate investor. I flip properties. I own a lot of single families. I own commercial real estate, and we work with clients all over the country, showing them how to protect themselves and little things. And I'll give you an example of that. So there's one investor who had bought a multifamily, and a CPA recommended he put it into a single member disregarded limited liability company for asset protection. And the best part about that, he said, is that you don't have to file a tax return. And so this investor thought, oh, that's a great strategy. Great. I'm going to have asset protection. I won't have to pay the CPA to file a tax return. It's going to show right up on my 1040. Great. I get the best of both worlds there. But the problem is the CPA didn't know the right questions to ask. You see, this guy bought this property with the intent to stabilize it, get the rents up, rehab it a little bit, and then flip it within 5 years. So what he didn't focus on is that by creating that type of structure, you're actually impairing your ability to sell that property in the future, which he ran into because he called me up and he said, "Hey, I keep having buyers fall out of financing." I said, "Well, how do you own the property?" He said, "Well, I own it through this single member disregarded LLC." And I said, "Well,
Good
that's
gosh.
your problem right there, because underwriters, they need to verify your income and expenses associated with that property. And the way they're going to do it is off a tax return. And you can't provide them one because your entity doesn't file a return. So you see, it's little things like that that if you're not up on it, you're not experienced, you're not in the business itself and treating real estate as a business and grasping that concept, it's really going to slow you down in building up your legacy of wealth.
There are so many people that I know that fall into that example, right? They're just not reporting what they need to be reporting just because they just don't know how to do it, right? You got a single, that's the best, a single member disregarded entity. Gotta love it. Absolutely gotta love it. So you've curated this, all of these mistakes and these lessons that you've learned, and you have an event that's coming up that Think Realty members should absolutely, in our audience and viewers, that they should absolutely attend. And like, I need to figure out a way to clear my schedule to get there, and I'm traveling a lot, but I need to probably not do that so I can sit in the front seat, in the front row, and like take some notes, because this is really important. I mean, this isn't just like a fly-by-night thing. Oh, asset protection, let's figure it out later, right? It's kind of like insurance, right? You're not going to get insurance when you need it. You need to set it up in advance. Tell us about this event, when it is, details, and any offers that you got.
Yeah, so we teach the event all over the country. So there isn't like one next week, the only one you need to get to. We teach this 3-day tax and asset protection workshop for real estate investors, where we go really deep dive into the types of entities you should be looking at: corporations, limited liability companies, land trusts, limited partnerships. Because again, it's not a one-size-fits-all approach. If you're flipping real estate in California, for instance, you shouldn't be using limited liability companies. You should be using limited partnerships to save yourself on taxes versus doing that same activity in Texas. And so we cover the basis on how to set these structures up. And then we go into the tax planning behind it, how to reduce your taxes on your real estate investing, through cost seg or other provisions that are in the code that will help benefit you. But at the same time, we're going to overlay the fact that if you're building a business in real estate, then there's certain ways you should be taking your income, like on your tax return. If you have rental real estate, and right now maybe you're carrying it on Schedule E, page 1, where most people carry their real estate. That may seem like the best way to do it because that's the way you've been taught, when in reality, you should be carrying it on page 2 by setting up the proper structures. Because when you apply for a loan, rather than having 75% of your income counted, you can get 100% of your income counted. And so many real estate investors miss this. They can say, hey, they're not looking at all the income I'm making from my property. And I said, well, that's simple, because Freddie Fannie guidelines don't allow them to look at 100% of your income. But if you just changed how you held this on your tax return, you can get the full 100%. So again, we teach all of these concepts and put them all together. And then we actually sit down with individuals that attend the event and we design them out a plan. And if you want to take advantage of this and come to our events, one of our events, you can go to our website. You should go to Aba.Link/ThinkBP. The event's $197 to attend. We got some great bonus offers for when you sign up for the event, but it's a 3-day event and it's extremely immersive. And when you walk out of there, not only are you going to have a plan, you're going to have a firm understanding of what you should and should not do, because real estate investing is a business. And if you haven't figured that out yet, it's just going to take you a lot longer to get to where you want to go. Because as I stated earlier, entities can help you. And what we want to do is show you how you can create structures around your investing so that when opportunities present yourselves, you're ready to take action. I mean, we can show you how to take an IRA and gain access to a completely tax-free and use that money in real estate investing for yourself. These are things that most CPAs and attorneys, because they're not real estate investors, they just don't understand how to use entities for the real estate investor to help them achieve their goals.
Love it. And so that link, one more time, is aba.link/think B as in boy, P as in Pam. Okay, aba.link/think B as in boy, P as in Pam. So check it out and make sure you get signed up. One of the complaints that I get all the time is, well, geez, Abhi, do I really have to do this LLC thing? I mean, yeah, that's kind of like a duh. You have to, but you have to do it the right way. And checking out an event like this, where Clint's going to be and his team's going to be to help you walk through this set of challenges that you might have, it's really important. And it's really important that you do it now. The end of the year is approaching and going into 2020. You want to make sure you have all this stuff set up. So, buy yourself an early Christmas present. I think it's fantastic, right? It makes sense. It's $197, and you get 2 tickets. You get a copy of the book, and you get a strategy session. Like it makes a lot of sense. Clint, before you go, question for you on LLCs and where I should create them. I've heard a lot about Nevada LLCs. I've heard a lot about Wyoming LLCs and charging orders and et cetera. Where's the best place?
All right.
To
well, here comes my
start an
attorney
LLC?
answer.
Okay. Yeah. What's your attorney answer? Okay.
You see, that's why I say it's not a one size fits all approach.
Yeah.
I mean, one of the strategies that we spend some time on teaching is how to hold real estate anonymously so that people don't know what you have, because the more that they see, the more attractive a potential defendant you become. So in structuring your affairs, like holding your LLCs, let's say that you own property in Florida. Right now, all those LLCs are in your name. I could just type your name in and see everything that you have. But if you structure it slightly different, using maybe a Wyoming or Delaware LLC as your initial holding LLC, not to own any property, but just to be set up to provide anonymity, then when you go forward and set up your Florida LLCs or your Texas or Oklahoma limited liability companies, nothing reports back to you. And so you can be completely anonymous with your real estate holdings. I mean, all my real estate, none of it is in my name. None of it is traceable back to me except through my tax returns. And there's a lot of reasons for that. I mean, recently, New York just passed a law to disclose all real estate owners. That is, if you have an LLC set up, your information must be made publicly available. And there's only one reason why they did that, from my point of view, is that they want to give this information to tenants, to people who reside in your properties, so that they can then use it to essentially strong arm you. I mean, if you have a legitimate claim against a company that rents you a piece of property, an LLC, you can sue the LLC. Why do you need to know who the owner is? Well, because you can bring pressure to bear upon them in other ways to get them to take whatever action you're requesting of them. So rather than go through traditional legal channels, go through the social media channels. And so privacy, I think, has become even more important in this day and age, and we teach you how to do that.
I think that's pretty slick. I think that's pretty awesome. I need to attend. I'm going to come. This is going to be awesome.
Right on.
All right. Well, cool. Clint, I certainly appreciate the time. And it's always eye-opening having these conversations with you, because I always learn something about asset protection, and I think one thing, and the answer is, well, all right, Abhi, hold on here. Hold your horses. You don't know what you're talking about. You're not an attorney. You're just, this really good-looking podcast host. So I can only know so many things, and that's why I have some awesome people around me, and you included, to help guide me in the right direction. And everybody listening and everybody watching needs that help, period. And if you don't, you're just probably stupid. So here's what you do. Go to and Clint's laughing, but he also agrees.
Put a finer point on it, right?
Right. So go to Aba.Link/ThinkBP. Get signed up and get your asset protection questions answered. It's more important than you think. Trust me. Clint, thanks so much for your time. I certainly appreciate it today, man.
Hey, thanks for having me on. Good talking with you.
You got it. All right, Think Realty Nation. This next segment is brought to you by Real Property Management, which is the largest residential property management franchise in North America, managing tens of thousands of properties for individuals, investors, and institutions throughout the country. Learn more at realpropertymgt.com or call 888-806-7088. Now, here's the deal. I have a rant, and that's what this segment's going to be, probably for 30 seconds to 45 seconds. There are far too many people right now that are buying property emotionally. You're getting involved in deals emotionally just because you need a deal. And let me tell you something. It's not a good method of buying an asset. You got to look at the numbers first. I went to Indianapolis recently. I've been going to a couple cities. Number one is Indianapolis. I went to Birmingham. I went to Huntsville. I checked out Chattanooga, Greenville, South Carolina, and also Charlotte. I'm looking at expanding my portfolio. But you know what I'm not doing? I'm not going into these markets with I need everything. No, that is the worst way to do it, because guess what happens? You don't make smart decisions this way. You've got to meet with the right agents, you've got to meet with the right brokers, and if you have this hyped up mentality that, hey, I have capital, it has to be deployed by the end of the year, you know what's going to happen? You're going to make dumb decisions, and you're going to regret buying the assets because you didn't do enough due diligence. Right? The more hyper you get, it's easier to overlook some of the critical things, like red flags of a bad tenant, of a bad foundation. Maybe the roof needs to be replaced, and because you're so excited to buy a property, whether you're new or a pro, because you got to deploy the capital, you're overlooking things that should normally not be overlooked. It's going to cost you financially, it's going to cost you mentally, and it's going to become a headache, especially if you're investing out of state. And we just finished talking about asset protection. You know, God forbid that you start buying all this stuff and you are personally attached to it. Now, it's like the trifecta, right? Like, you're broke, you're ugly, and you're stupid, right? Like, that's a major issue. This is exactly the same thing. So if we're not paying attention to the numbers and we're getting into a market, we're getting into a deal because we need to do it, and we're letting the market activity and the agents and the people that you're connected around to hype up these deals, guess what's happening? You're making the wrong decision. So take a step back, breathe, maybe consider meditating for a second, maybe read Clint's book, maybe read my book, maybe levitate. I don't know how you do it, right? Maybe some of these things, work out, pump some iron, do some yoga, work up a good sweat, and then look at your deal the right way. And I guarantee you, you'll come to a much better conclusion. And sometimes it's to pass on it, and that's okay. It's been fun. You want to get in touch? Do so. Go to thinkrealty.com. You can find me anywhere online, on Instagram, Facebook, etc. And last but not least, I've got to thank today's sponsor, Norada Real Estate Investments. Check them out. Go to www.turnkeyrealestateinvestments.com. Norada Real Estate Investments, your premier source for cash flow investment property. Again, that website, www.turnkeyrealestateinvestments.com. Think Realty Nation, it's been real, it's been fun. Until next time, happy investing.